Good weekend, all. Ira Epstein, and here we are on Sunday with your weekend edition of your financial markets, where we'll look at the weekly charts instead of the daily charts. But let's get right into what we've got going come Monday morning. You're going to get the Chicago Federal Reserve National Business Index for August at 7:30. The U.S. Senate, as you probably know, did not pass the federal government stopgap funding bill earlier today, and they went out on their vacation. Okay, so they'll be called back unless the Democrats want to have a government shutdown, which is very possible. They haven't been in the news recently. They may want to do that and get themselves some publicity. It's very possible there. Remember, the government shutdowns, don't panic. This happens. I don't want to use the word regular, but it happens. And things get held up a little bit, and then they come right back. Presidents Trump and Xi did speak on Friday, and from everything I read over the weekend, it broke the ice, and that's about where it ends. Telling me there's a format for TikTok, a format? That didn't tell me there's a deal. It just says there's a format for a deal that might be accepted down the road. The USDA cattle on feed report came out, and it's always in cattle difficult. Screwworm is still very much the issue that everybody's thinking about. But in terms of the cattle themselves, well, you didn't market as much. That was down. If you take a look at the placements, they're down from the prior month. And if you look at the cattle on feed report, it's actually a little bit higher. That's the way I view it. Late on Friday, the Trump administration blocked the United States Steel Corp's plan to stop production of a plant in Granite City, Illinois. This is when Nippon came in, if you'll remember it all, and we were told things wouldn't happen. Well, they are. As you know, with any corporation, you say one thing and you try to get away with as much as you can, right? We've seen this all our lives. And basically, there's still two furnaces at that aren't operating. We can afford to make more steel, I would think. We don't have to import. U.S. S&P 500 index. When we look at a weekly chart of closes, that's all that this is. You can see that the market on that basis is still up and over the 18-week average, and you're at a new all-time high. When we drop it into the bar chart, you can see that the market's run away. Now, if you came back here, we were talking, could this have been a form of an inverted head and shoulder? And I said to you, this had to be months ago, back into the month of May. And if it would develop, I probably said it in July when we were over here, actually, that if you flip that over and take the market from roughly 4,800 to 62, is that the real number you can go with? I mean, that'd be quite a bit. That'd be 1,400 points, and that would put the market from let's call it the 62 level to 7,600. It's possible. Market's certainly moving up. Why? Because with the cut by the Fed and the idea that there's two more rate cuts from the majority, and the fact that the market is looking that inflation, yeah, it's here, but it's not galloping away, and the Fed can deal with that over the labor market getting weaker. The market saying the Fed is now capitulated, and the market is moving higher off of that. That's how I'm envisioning what is taking place. Higher lows, higher highs, up and away you go. Same thing going on when you look at moving averages, which takes you to the Bollinger Band top of near the 6,800 level, 6,781 on a weekly chart. That's getting into the zone of where the first resistance can happen. Remember, you haven't really hit a Bollinger Band since back here. You made an attempt at it. Are you going to hit it now? That'll be the big question. Are you embedded? Absolutely. So when you're embedded, are you ever thinking the bear side if you have a bullish embedded reading? No. You're looking for where the breaks come in. Can you jump in, or is it too difficult and the risk is too much for you? Basically, that's what you're looking at. You have the same thing in the Dow. You have the embedded reading. You're making a run towards the upper Bollinger Band of 47,134. So until you lose these readings on the weekly and the daily, the trends are still up, and the breaks on a weekly chart are still being bought, in my opinion. NASDAQ fits into the same role, and look what it did. It finally got up to the Bollinger Band. It really hadn't hit it since the beginning of the year. And this on a weekly chart. You made your runs at it right here. You didn't quite hit it here, but now you finally got back up there. So again, the tech industry running wild and all the different components that run that tech part. In other words, it's not just about AI. It's all the software that goes into the AI and everything around it, and it touches everything. When you come to the Russell, it finally got up. That's why I've left this on, as you know, every single week. 2477.10 has been sitting there on the futures, waiting for it to be hit, and it finally hit it this week. So, vindication. Now, I'm going to repeat, an embedded reading. So all the stock markets, if you don't take out this past week's high, and you break, I think it'll offer a buying opportunity on the breaks. That's what the market is saying. In the DAX, when you go to the weekly chart, the battleground is clear here. To me, it is the 4460 level, the last rally high from last week. If you get over that and don't break down first, you actually set up higher lows, higher highs. While momentum's been pointing down, it might want to flatten out right here. So we'll see if that's it. I more or less think you're going to be caught in sideways Bollinger Band. This market had its run. Now it's got to consolidate it, and that's pretty much what you're doing with an upside bias. Then we get to the bonds and notes. I'm going to come back and repeat what I've said before. The Fed affects the 6-month, the 2-month, the 30-day T-bill, maybe even as out as the 2-year, but not the 5, 10, and in my opinion, the 30. And therefore, as this market came up with the euphoria, the Fed's cutting rates, the reality is the marketplace sets this. And what happened this week? You added yield. When you drop in the futures, you add yield. And it went up to the first challenge last week, not just this week, of the 100-week average and the upper band, and it got thrown right on back. I'd expect that, and the same I'd expect out of the 10-year. That doesn't mean I'm bearish then. It means that if you're going to play that interest rates are falling, it's the front end that I'm much more interested in than the back end. In the dollar index, the dollar did go down to the lower Bollinger Band. What do I teach in my course? I teach that when first time you hit a Bollinger Band, upside or downside, you see pros take money off the table. Is the market then embedded? It's not. It lost that reading a while ago. Therefore, on rallies, I'm looking to see how does the resistance show up at 97.96, the 18-week average. That'll fall a little bit this week, but that's where it's at right now. I'd get concerned if you took out 98.72. But if you step back on this chart and you look at it, I mean, on a weekly chart, this is a pretty bearish picture still. So I know that on the daily chart, it's been having a rally. Is it going to hold? That is the question. In the eurocurrency, it's the flip-flop. You went up to the upper Bollinger Band where you should stall out. Are you overbought? Of course you're a bit overbought. Should you chase this? No, but it's not in a bear camp. Keep your eye on the Canadian dollar. It just got itself up and over the last rally high. Can it extend it is the question. The market's come down. I don't see that it's set itself up for anything yet, but any close over 290 and a half sets the market where it could be moving. It's only 3 cents from here, and you get up to wherever that upper Bollinger Band is. The battleground is the 18-week average. It's got to prove itself right now. The bears are going to try to hold it back. The bulls are going to try to push it through. In the Japanese yen, we have a pattern of a higher high, a lower low. I don't see a trend pattern there at all. Bitcoin, still bullish overall. Market came down, fought a battle at the 18-week average, and the bulls succeeded in holding the market together. So until the market gets through this area right here, I think support's at the 112,000 area now. When we look at Brent versus WTI, they've picked up the differential between the two. In the Brent, you're still in a downtrend temporarily with lower highs, lower lows still at work there, but very oversold. It either embeds and establishes that entrenched bearishness in the market, or this is an area that it fights a battle and tries to get back over 69.51 and do something with. Right now, I think the bears have the control on the market. And the same thing is true in WTI. It's oversold, downtrend, resistance 65.40, get over 66.03. I think you have to back away at that point from being bearish. But I think the bears will try to defend their position there. Heating oil, I have a different attitude. We're already now September 21st, as time's going on now. Sooner rather than later, we're going to get into those chilly temperatures, and you'll want this. But right now, this should be your resistance, the 100-week average, would support the 18, and unless the market gets back under 224.64, I think the bulls have control of the market. Take that out, and they lose the bull control, but I don't see anything to turn the trend bearish just yet. So you put it all together, you try to come up with game plans, and that's my job with you. If you want to join in and see me in the mornings and what I'm telling my subscribers, it's really simple. Move your cursor up to the top there and do that at this point. You go to iraepstein.com, research, that's where that's located. I'm Ira. You have yourself a great weekend. I'll catch up with everybody in the other videos today or in the morning flash update. Take care now.